Alright, so in this tutorial, I'm going to introduce you to the Advanced Yearly Financial Model here at starterfinancialmodel.com. Essentially, this is a fully integrated financial model that builds financial projections over a 5-year period. So looking at the tabs here, you can see that there is an Assumptions tab. And the data from this tab establishes a foundation for the remaining revenue and expense drivers, which can be found on the blue-colored tabs here. And there are 3 scenarios that you can use for this model. We have a normal scenario, an optimistic scenario, and then a pessimistic scenario. Ideally, all 3 should be filled out so that you can prepare for best and worst case scenarios. Finally, you can also conduct sensitivity analysis here to see how changes in key variables affect the overall bottom line, which we'll be looking at a little bit later. So the goal really is that you're not just guessing as to what your revenues and costs will be. Instead, you're generating assumptions that help build your revenue and cost drivers. The key here is that these assumptions can be tested and tweaked at any time. They're not just wild forecasts. So the light green cells take inputs, and in this example that I'm going to show you, we'll be building a model for a service-based company operating only on the internet. Keep in mind though that this model can be used for a service, subscription, manufacturing product, or even a brick and mortar company. So the assumptions are organized into 4 sections. So on the far left here, you have the actual assumptions that are used to power the model. And most of this data is pulled from the other sections except for a few inputs here and there. And the remaining sections hold the data for your various scenarios. And again, we have a normal scenario, optimistic, and then a pessimistic scenario. So if you look at the normal scenario here, we start with determining the total available market. In other words, if you were selling a subscription, let's say to an online photo editor, what is the total available market? Then you have a particular niche or segment you're operating in. Perhaps you're targeting just generalists, and you've done your research and believe that you can obtain 90% of the market. So in 2013, we think the market is 200,000 people. We can get 90% of that. So the total addressable market is 180,000. So next you want to go ahead and enter the beginning price, as well as the yearly growth percentages for these assumptions over here. And those all get entered here, obviously. So we have the sales price, premium clients. Let's say we have a non-subscription version that has less features, premium clients, which is our subscription version. We have conversions from the freemium to premium, and then we have the churn ratios. And then if you scroll down, I also have a section here for other revenue. This could be advertising or revenue from affiliates, for example. Okay, so now let's move on to expenses. Starting with employees, you can enter the employees over here, and you can enter part-time employees just using decimal points. After that, you enter the wages and additional costs such as bonuses, training costs, taxes, etc. This is all pretty straightforward, but it's just time consuming. Fortunately, many of the numbers will stay constant as a percentage of total wages. If we keep scrolling down here, we have our direct expenses or cost of goods sold, and then our sales and marketing expenses. And finally, we have the interest rate for loans, cash in the bank, the tax rate, as well as a few balance sheet assumptions. So when filling this out for the first time, you really want to focus on the market. So those are where the big swings will come in. Where do you think you'll fit in? Can you hit those numbers? Don't worry about whether you're going to sell your product for $10 or $15. That's where the scenarios are for. Just focus on a range. For example, use $5 for the pessimistic scenario, $10 for the normal, and $15 for the optimistic scenario. That information, coupled with an extensive SWOT and marketing analysis, will help determine 1, how much you can spend, 2, how much funding you need up front, and 3, most importantly, whether your business model is viable. In essence, we are really putting numbers to your business model. Okay, let's say for whatever reason you entered all these numbers wrong. You can delete all the input cells on a worksheet by pressing Control P on your keypad. So let me just show you how to show you that real quick. So you can see that's a just a quick shortcut. So I'm not going to save this. I'll just go ahead and fire this back up. Okay, well that's it for the Assumptions tab. This worksheet accounts for about 80% of the inputs, so rest assured we will be getting to the analysis soon. So moving along, you don't need to enter any inputs for the Revenue or Employees tabs. This data is calculated from the Assumptions. And on the Expenses tab, you can see here that there are some miscellaneous expenses, dues and subscriptions, rent, phone, etc. that need to be added in. Then on the Funding tab, you need to enter any notes or loans received, as well as the repayment schedule here. And you also need to enter in any outside funding, such as seed funding. Then on the next tab, you have your capital expenditures. So let's say in the first year we need $20,000 worth of computer equipment that will depreciate over 5 years. Then in 2015, we need another $20,000 worth of equipment. Again, that's depreciable over 5 years. And for now, let's just go ahead and assume that we don't dispose or sell of any of that equipment. All right, well that concludes the revenue and expense wrap up. Let's move on to the financial statements themselves. So first on the balance sheet, you want to enter any of the starting balances in column G here. And just to keep this simple, we'll just say that we started off with $500,000 in cash in the bank, which will raise our current assets as well as our equity. So one of the most important things you need to take note of is that the balance sheet balances. That is that the assets equal liabilities plus equity. And I have a checksum down here indicating that it does. So let's say, for example, I had entered only $450,000 here. You can see that I'll throw off the entire balance sheet. Okay, let's jump back over to the income statement. You can see all of the revenues, costs, expenses, then of course the bottom line here. And finally on the cash flow statement, you absolutely need to make sure that your closing cash balance is never negative. If it is, you'll need to find additional funding, raise revenues, and or cut costs, or else you won't be able to pay short-term liabilities, and eventually your long-term liabilities will catch up to you. So after all the data is entered, you want to go ahead and press Control O on your keyboard. And what that does is that recalculates the correct interest expense. So basically most financial models have to address circular references, which for simplicity is when functions indirectly become dependent on one another. And this can cause problems unless dealt with correctly, which is why we need to recalculate the interest expense. And there's directions on how to do this on the Start tab here. Okay, so next we have the Summary tabs. We have Ratio Analysis, DuPont Analysis, Variance Analysis, and then the Common Sized Income Statement. And we also have just some simple charts here, as well as an overall summary tab. And this is meant to be used with your business model. When you make pitches to investors, you could possibly copy and paste some of the charts over here to make it look nice. Okay, so at this point, there's plenty of analysis you can conduct. So let's look at the profitability ratios. You can see that the net income margin is pretty low. At this point, you would want to look at other companies in your industry to find the average ratios for comparison. And just looking at the total costs here, you can see that employee costs are really high. Do we really need all those employees? Could some of them go part-time? Can we drop wages without losing too much talent? So let's go ahead and tweak that. So first you want to look at your summary tab here just to get a sense of where you're at right now. So 2017, predicting $630,000 in net income. So going back to assumptions, let me go ahead and tweak this. Say we only need one direct employee. As far as S&M costs, sales and marketing costs, let me just go ahead and drop this down to 0.5, and then I'll go ahead and take this person out. Then as far as general and administrative, let me take this out here. Oops. I'll just drop this person down to part-time there. So now you can go back and see the net effect of those changes. So if we go to ratios, you can see that the net income ratio or net income margin is much higher now. Look at the summary tab. Now we're up to $741,000. So we got an additional $130,000 in revenue in 2017. So you see how easy that is to tweak? Investors love this. They want to be able to go in and make minor tweaks like that just to see how your model responds. This is what's called sensitivity analysis. In other words, how does the change of a single variable affect the bottom line? So let's do another example. Let's look at, let's say, churn. Maybe it's too high. Let's go ahead and drop that down to 2%. And again, you can take a look at the net income margin to see how that's affected, as well as the actual dollar volume there. Then of course it's really easy to check the scenario analysis. You just use the drop down here. So we could change this to optimistic. Now keep in mind I haven't changed any of the employees or the churn ratios for the optimistic or pessimistic scenario. Then you go back to your summary, check to see how the bottom line changes, go back to assumptions, change pessimistic, and you can see there's a huge range here in the bottom line, which isn't good. I mean, granted, yes, we need to change the employees to see exactly what the range is, but you don't want a huge range like this. Anyway, you want to continue to check your assumptions, and then once you have your base numbers set for each scenario, you can continue to tweak your model with any additional research you uncover. And eventually you'll be able to see if your business is really worth investing your time and money in. And remember, things change, especially in the early years. Take these numbers for what they are, projections. As your business progresses, update your model. See where you should be investing time in and where you should try to cut costs. Let this model, which is essentially a mathematical representation of your business strategy, guide you. All right, well, that's it for now. If you have any questions, please email me, and thank you for watching.